It is a lot of work. We have done a lot of work. This team has done a tremendous amount of work. But currently, we're positioned for this year for record growth, and really we've set up to capture that significant remaining reserves.
And remember, there is about 350 plus million barrels still sitting in the ground in the main three properties only. So you add in the other properties, the other acquisitions that are potentially coming here, I think that number just keeps going up.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
Welcome. This is Financial Survival Network. I'm Kerry, Lutz, your host. Well, today I'm going to introduce to you my latest investment concept. No, this interview is not sponsored. I started investing in this company back in 2022 in the midst of its reorganization. It's now one of my largest holdings. At my advanced age, I'm looking for low risk, but I still want large returns. And this company, Prospera Energy, really, to me, fits the bill. I love turnarounds, and this could be the biggest one that I have ever been involved in. The company literally 2 years ago was in a terminal death spiral, but the CEO, Samuel David, you took over the company and you've turned things around. With me is Samuel David and Shubham Garg of White Tundra Investments, and you find him at whitetundra.ca. So, Sam, I understand you were in retirement and you came out to work your magic on Prospera. The company in a little more than a year has gone from 60 barrels a day BOE, barrel of oil equivalent, to 1250. And in the process of this, you cured hundreds of environmental and legacy creditors who've also been satisfied. I'm just curious, has Harvard Business School approached you yet to teach a course on turnarounds?
Thank you for that acknowledgement.
But seriously, your background, over 3 decades in the oil industry, expert reservoir engineer. It sounds like you had a lot of sleepless nights.
Well, it's a passion for your profession, and passion for what we do. When you enjoy what you do, it won't give you sleepless nights. It gives you anticipation, excitement, and gives you a motive to get up every morning to do things.
Couldn't agree more. And hey, look, with your background, especially the reservoir engineering aspect of your career, that really, really worked to the company's benefit, didn't it?
Well, my background is reservoir development and exploitation. And in oil and gas business, it all starts with the base, the reserves. How much do you have in your tank, and how much have been depleted? What portion of it has been taken out, and how it was taken out? So that's I'm all Western Canadian Sedimentary Basin. I grew up in Calgary. I went to University of Calgary. I started out with Petro-Canada, spending 12 years in the field in various metropolis of Alberta and Fort St. John and Fort Nelson, and then I came back to the head office and really started working on the reservoir development, and it all starts with the reservoir architecture, the type of setting it is, the type of energy it has, whether it's supported by water, the fluid mechanics, the rock mechanics. It all brings together, and then you're able to exploit it and deplete it optimally, not with excessive number of wells, excessive number of things, but optimum depletion plan is probably, it is economically and environmentally is the best thing to do. And that's something I learned over the years. Like you said, three decades. Thanks for saying 3 decades, but it's 4 decades.
Hard to remind you.
Yeah. So as you mentioned, I came out of retirement. Yes, I was semi-retired, and I was brought into it, kind of pulled into it due to personal relationship with the previous CEO who passed away in 2018. And his spouse called me and asked me if I could help out with this company because he was in a terminal position, as he mentioned. So when I came on as an advisor, the first thing that dawned on me was the significant amount of reserves in these contiguous land holding that this company had. But this company was a small junior, didn't have the financial or the technical financial resources to really exploit this significant amount of reserves, and it was totally mismanaged as well. Of course, the COVID really amplified that high operating cost operator situation. And I also came out of retirement because of my passion for the oil and gas industry in Western Canada and how it has been tarnished by optics. It was on a decline. There was a lot of people who left the city. Lots of people are out of jobs. And there were a lot of properties were orphaned. It was in a dismal position. And to me, oil and gas industry, oil patch is where I have always been, and where we gained our livelihood. And this great Alberta and Saskatchewan has prospered from it. Hence, I got involved with Prospera to help as I can.
As long as we're going back to history, Shubham, when did you become aware of Prospera, and give us an idea of what the main points were that attracted you? And I should mention that you are an engineer, extensive experience in the oil patch. You're not some newbie, and now you're part of a group that makes these types of investments in Canadian juniors.
Yeah, you bet, Kerry. So we got involved with the most recent private placement, as maybe some of the viewers here know. Excuse me. I think I first came upon Prospera. Somebody had mentioned this name to me in about April or May of last year, when the company had put out this very, very detailed corporate update and very, against what a junior does. A lot of these junior companies, they like to be in their little shell. Nobody knows they exist, and you got to dig through Alberta records and Saskatchewan records to have any understanding of the company. But Prospera had a full update with the reservoir's history, some of the very important technical parameters, and sort of where things were going here. So I saw that the team had executed a few things and they had a few other things to execute. So I was really interested in that. And I've got a extreme amount of respect for engineers and other CEOs who have in the past worked in the field. This is not something that any engineer wants to do. You've got your brand new 4-year degree. You want this comfy, nice little office with your coffee maker and whatnot. And, in Sam's case, and even some of the team around him, having worked in some of these small cities myself, I think there's just a different level of passion and respect and understanding that you get by being in these areas, able to deal with a deal and work with the operators on site, able to understand what's going on a field level, not just because your spreadsheet said XYZ, that it's reality in nature out there. So just a different kind of side of things. I've always been interested in getting involved with highly technical teams. I think it's a dying art that really, I want to make sure that we can bring more oil out of these reservoirs, and just a great learning experience for myself as well. So those are the things that brought me in. A low recovery factor in these high OOIP pools, I think, is just very hard to find these days, given that a lot of easy pools have been discovered and developed, and the oil has been produced and consumed. So literally, there's a few of these left. If you want to find more of them, it's very tough. It's a very tough exploration world out there. A lot of wells are not panning out. A lot of wells are producing lower quantities than what they used to. And even if the wells produce a higher quantity, the pool just itself is not big enough to really make it worth the overall expense. So these things brought me in. And then the cherry on top was, as the oil cycles go up, some of these heavy oil companies make a lot of money from the upside torque. And then add on top of that is that as the production number goes up, the operating cost per barrel comes down. So you have this double whammy effect on your net back in a structurally bullish oil environment, which I believe we're in currently.
I'm putting on my lawyer's hat for a moment here. I am a recovering attorney. Sam, you took over this mess, like thousands of creditors. I don't think I'm exaggerating. Hundreds of environmental issues. I know you've been asked this question before, and I know you looked at it, but for me, one of the things that attracted me most to the company was that the easy way out, the expeditious way, the fastest way to turn the company around, take it through a bankruptcy or liquidation, sell off, buy up the assets that are valuable, and dump the rest on the government, let them fix it up. But you kind of took the road less taken here, didn't you?
Correct. It was a challenging road with all these obstacles you mentioned, but too many people have done that and left a lot of vendors and wells behind, burdening the taxpayers and people without jobs, and forcing the entire community into bankruptcy. Really, there's too many companies have done that. So coming out of retirement, coming out of COVID, all this things happening, I see a big price, but there's a challenge here that we have to overcome, a moral, ethical challenge as well, to commitment to pay something back to the community instead of just leaving them behind. And it's my passion. I took it, and fortunately, there's a number of investors, mainly two main ones, the Lacey family and Mr. Dave Richardson as well, supported that idea. They encouraged it, and they said, "Treat people the way you want to be treated, and let's make Prospera a clean, green energy producer, be a front runner for the ESG initiatives, and change the optics of the energy producer."
And that was at a personal expense to you, because that probably quadrupled your workload, because you got to work with all these diverse parties as well as the government, God forbid. And all of this, just an enormous expenditure of time and effort, and near and dear to my heart, legal fees.
Fortunately, by the way, I used to look like Shubham when I started the company, but now I'm less hair. No, I'm just kidding. But fortunately, I have a good team, network of team that I've worked with many years, and we have a good network of service providers and lawyers that I worked with before. So we became functional very quickly and started to address the obstacles immediately. It is a lot of work. We have done a lot of work. This team has done tremendous amount of work, but currently we're positioned for this year for record growth, and really we've set up to capture that significant remaining reserves. But we also added a product mix to the portfolio. We added a light oil, medium light oil, and we also have gas. We aspire to be a good product mix of 40, and maybe 20 or 30 gas. So it was a lot of work, but Prospera is in a really good position to move forward.
So, Shubham, we all know that technology affecting every aspect of society, no question about it. In the oil patch, though, we've seen a lot of technology, horizontal drilling, enhanced secondary recovery, things like that. But it looks like there's some developments coming out now that really can be game changers, both for the industry and especially for Prospera.
Yeah, for sure. I think this is one of the most underrated aspects of what we've seen in the oil and gas industry is since 2014, when the oil market collapsed per se, there's been a lot of technology that's happened in the meantime. What happens is when prices are lower is when people do like to innovate a little bit on the cost savings and some of the drilling and completions efficiencies. When prices are higher, people spend more money on exploration, on enhanced oil recovery, these sorts of techniques. So where we are right now is in a very, very, very nice area where some of these reservoirs, not only has production declined a lot, but at the same time, there's been other technologies come up that can increase production to levels even higher than where we were at. So the first one, as you mentioned, is horizontal drilling. We have way better geosteering to stay within a thinner zone, not have all these dog legs in the way that really can impact your production, especially in a heavy oil sort of field, medium to heavy oil field. So really, I think going to help Prospera here going forward. A lot of the field has been only vertically developed. So as we switch to horizontal drilling, better economics, better well production, better metrics, less property tax, less wells to keep up with, just an overall cleaner operation. And then the second thing I think is the polymer flooding, the water flooding and the polymer flooding. These are techniques that have worked in the Manville assets. If you looked at some of Baytex fields, some of Strathcona's fields, they have worked in this formation. The economics on it are really, really good if you can implement them at the right time. And I think we're at a really good phase here for some of these opportunities to get implemented. There's a lot of data out there. And I think the optimal way, of course, is to run a trial on a small part of the field, see how it works, and then you can do a full-scale implementation. And remember, there is about 350 plus million barrels still sitting in the ground in the main three properties only. So you add in the other properties, the other acquisitions that are potentially coming here, I think that number just keeps going up. So those are the two main ones. And then the third one, which is kind of a kicker, is your heavy oil, medium oil upgrading technology. So this is something that Prospera is working on with Aduro Cleantech. There are a couple of other companies that are also working on this technology, and one that really should have been in place many years ago, given where Canada is in that space. But this is something that can bring oil, as in the case of a synthetic crude oil that's produced from the oil sands, that trades about $3, $5, $7 above WTI. So think about that, a heavy oil trading above WTI. And I think if this sort of technology can be implemented, even on a smaller scale, you have this immediate impact of, call it $20 plus is what you're getting compared to your base oil sort of pricing. So a lot of extra bonus netbacks that can be kind of done as time goes on. And this is just a developing story. I think this is going to happen in iterations. There's going to be many things happening at the same time. You're going to have little trials, little implementations, a few acquisitions. You're going to have some horizontal drilling and some optimization. It's all going to happen at the same time, work on top of each other, create the cash flow to then put back into the company for further activities. And that's really what makes it so exciting, is that the oil is there, the technical team is there, the money is now there, and then the overall development is just progressing such that you can really achieve that escape velocity and get into the big boys game, if you will.
Shubham, do you want a job here?
I saw his resume.
That was well said.
It's very impressive. So Sam, you've been doing this a long time. We're getting oil out of the ground now, as Shubham said, 10, 20 years ago was thought to be unrecoverable. Is this how you're going to get to 10,000 barrels per day, BOE per day?
That's a nice blue sky number, but you know what? We have a plan. It's always when you can see something. Yeah, this can be done. And do we have the assets to do it? Do we have the technology to do it? Do we have the people to do it? And we're sitting there with all the years of experience in developing many fields in Western Canada. We're looking at it. We go, we could have 1 billion barrels of oil in place with the acquisition and all of that. And we have the horizontal technology that we can apply that increases production. And as Shubham mentioned, we can give you energy with this viscosified fluid that we can inject and maintain the piston. And so we have nice steady production with low decline. But so you're increasing the volume. And then while you're doing that, you're also reducing all these surface leases that you no longer require. So you're reducing operating expense with property taxes, surface leases, things like that. But more so, you're reducing your footprint on the environment, and so you're less intrusive on the environment, and you're more effective way of developing. So you're increasing volume, you're decreasing operating cost. further, you're going to take that heavy oil with this technology, and we're seeing some good results already. We've seen 8 API has turned into something like 17 API. That's incredible. So we're doing our testing for us. So reducing the operating costs, increasing the volume, and further getting a higher markup on the price, leads to some incredible margin up ahead. And further, this production is not, high declining because we're doing reservoir management right away. So it's low declining. So your reserve life index gets beyond 25 years. I mean, if you say 40 years, people wouldn't believe it. But yes, it has the reserves and it has the reserve life index. We believe in it.
All right. So you mentioned acquisitions. You've made a few up to date. More down the road, I take it. What is your strategy, your philosophy of making acquisitions?
As mentioned, we have significant amount of barrels in place already. So we have contiguous ownership and high working interest ownership of the entire pool, 3 main pools. And then our acquisition is going to be adjacent to existing pools of similar nature. It also allows us to utilize services that are local, and it just carries on. It's more of the same. So you're not in a different area and hiring new services. So it really, there's a good synergy in what we're doing, and the acquisition fits right there. So we're expecting to expand on that in Q2 this year.
Hey, Shubham, one of the things that attracted me to Prospera, even though I know it might not be a conventional measure, but the replacement cost of the infrastructure in place. Now, obviously, that infrastructure has no value unless you are pumping barrels through it. But basically, the company's trading for a fraction of the replacement cost of its infrastructure. I don't know about you, but when I go buying stuff, I like to buy stuff on sale. I don't like to buy stuff for full retail. There's just something about it that just really disagrees with me.
Yeah, I think we're all value investors. That's why we're all here to begin with, in this room here. So I definitely think this is something that has been largely ignored over the last few years. The market has kind of lost track of what's happening. A lot of energy analysts that used to cover the space are no longer covering the space. So there's just a lack of understanding that, hey, it's not just the barrels that the company produces. There's a land value, there's a reserves value, there is your infrastructure value, which includes oil batteries, compressor stations, pipelines, all kinds of infrastructure. We just saw a transaction in the kind of northern Alberta space where a company sold roads. They literally sold their road infrastructure for about $50 million, I believe. So all of this has value, and it only gets reflected when people actually start looking at these companies and when they believe the oil market is in a structurally solid cycle. So it's going to take time, but as you mentioned, some of these facilities are good for up to 50 to 75,000 barrels per day in total, and the company currently produces about 1,000 from its medium to heavy oil properties. So big upside, not just from reducing operating costs, as we've discussed earlier, but as you mentioned, the existing facility is worth a lot just based on replacement value. And just keep in mind, we're in a high supply chain issue, labor shortage sort of environment in the oil field. So even if somebody wanted to throw money at it, it doesn't mean you can just build these massive batteries right off the bat. There's a delay on it. There's certain components that are up to 24 months out right now, and the battery cannot function unless the entire thing is built. So it's just an overall kind of shift, I think, in mindset that's going to happen, where existing assets will get priced at a different metric than some of these newer, we're going to build this thing sort of assets, because we're seeing this delays, cost overruns. TransCanada just reported on the CGL pipeline a $3 billion cost overrun. So I think it's just a norm here. We're in this high inflation environment. Assets that are already there and producing are going to get a premium, and it's going to play out over time here in the next few months and then the next couple of years.
Hey, so Sam, acquisitions, is there a price you have in mind if somebody knocks on your door with a checkbook? Somebody sees the value in Prospera and they say, it's such a bargain, I'm just going to buy it, and they cash out the shareholders.
those things are always there. That'd be great. But if I may tell a little story, we just started to get going, and we had an offer at around 30 cents. And I mentioned to one of the primary investors, and I said, "Would you sell for 30 cents?" And he just looked at me and he said, "I don't think I can say the word, but
okay, this is a family show. This is a family show here."
Yeah, he said, "No way, no way. My target is $5." He was saying, and I was thinking $2 because I see the opportunity. I'm a little conservative, but him saying $5, I was really encouraged. That we have the support because these properties. What we can do is what we control. What we can control: increase production, decrease cost, and settle all the arrears, which we will get out of it by end of this year, and have a robust financial statements with a low decline production and inventory of drilling locations. It's very appealing to all people with a check.
All right. Hey, Shubham, we got a lot of shares out here, a lot of dilution. It was unavoidable because it's the only way to save the patient is raising money and start addressing all of those legacy issues, which will shortly be behind. Are you phased at all by the number of shares? Nearly 500 million shares fully diluted. How big a factor is that really?
Yeah, I think, as you mentioned, this is something that just had to be done. It's the way to bring these companies back. I think given where we are right now, the team has done an exceptional job using the dollars in the right way to bring production up, to settle some of these legacy problems and bank debts and whatnot that were outstanding. And about $9 million in warrants still to come this year, on top of the private placement that we did, and then the cash flow that the company itself generates. So when I look at it, I'm looking at it more from a year-end 2023 standpoint, because a lot of the warrants will be fully diluted, will be at about a 500 million share count, roughly, maybe a little bit lower than that. And hey, the company is going to have what it has right now, 1,250 barrels gross, plus whatever they can grow this year. On top of that, there's the new horizontal drilling plan that's going to go into place. We're going to have some more information on some early EOR technology results. And on top of that, the money in the bank that the company is kind of going to make throughout this year. So this is kind of when I look at it from that standpoint, I'm very excited to see, okay, the company is going to have a base. We're going to have 500 million shares out. The base is lower decline, so it's going to cash flow kind of into the future. And the company is just going to use that to grow on itself. So from that standpoint, not really concerned. A large block of shares are held by Peter Lacey, the Lacey family, and then Dave Richardson. I love the support that they're giving the company. From my own experience, I guess I'll just share is that in 2020 and 2021, a lot of companies got bought out at prices that I think I would cry if I was a CEO, because the private equity and their supporters just wanted out. They said, just sell it. The first check you get, just sell it. And I'm very happy in this case that it's not the situation. We're going to develop this company over the next couple of years in a very strong oil cycle, get production up, prove out the reserves, prove out the drilling inventory, expand the fields out, and really develop a really nice company that becomes attractive, for the buyer. And I think we're just on a really good path here. We've done the money raising, the Prospera team has done the money raising. They've done the field execution. They've done what they needed to do, and we're setting up really, really nicely. 500 million shares. I run my calculations on it based on cash flow. I run my calculations based on a reserve value, based on dollar per flowing barrel, and I still see a phenomenal opportunity here, just because the geology is so good. And you got to start with the rock. The rock has to be good. The oil has to be there, and that's where we are.
Okay. And when I look at it, yeah, there's a lot of shares, but they're trading at, they reached 15 cents Canadian last week, 52-week high, which is always nice, pulled back a little bit to be expected, but it's still a market cap at 50 million shares of around 500 million shares. It's still $60 million micro cap. So it can only go up from there. Hey, Sam, one final question. 10,000 barrels, assuming it's attainable, what time frame would you put on that?
Minimum 24 months.
24 months? All right. Well, If you could do it sooner, I got a steak dinner for you at one of your favorite restaurants. Okay, and it's on me.
That's a good steak, I have to admit.
All right. Well, when I come out to Calgary, I hear you got one for me as well. So I can't wait.
For sure.
Hey,
For sure.
so all of you out there, take a look at the company. Everybody needs to make their own decisions. I made mine. You make yours. The website is prosperaenergy.com. Tickers in Canada, it's PEI. And in the US, for right now, it's GXRFF. That's one of those legacy things that we're working on to change. Gentlemen, Shubham, thank you so much. Sam, thank you. All have a great weekend. We'll talk again soon.
Thank you, Kerry.
Yeah, thank you. Cheers.
The Financial Survival Network.